Welcome to Cal CPA's tax series, and today we're going to be diving into labor and employment tax updates. My name is Susan Hatmaker, and I'm happy to make this presentation for you. And as you know, the One Big Beautiful Bill was passed recently in July, and so we have two major areas that can affect both CPAs and all of your clients. Not every employer, because we're going to talk about tips, and not every employer has tips in the workplace, but nearly every employer does have overtime payments and overtime rules in their workplace. So let's get started. This is going to be a below the line tax deduction, and we'll talk more about that a little bit later, but it's for qualified tips for individuals who work in traditionally tipped occupations. It starts for this year, beginning in January 2025, is going to cover 25, 26, 27, and 28. So the deduction for tips, for the qualified tips, is $25,000 per year. That deduction will have, it will be reduced by $100 for every $1,000 that exceeds $150,000 for single taxpayers and $300,000 for joint taxpayers. And notice it says it's going to reduce from modified adjusted gross income. So income from foreign countries, there's a few tax codes that apply here, and it's going to be Puerto Rico, Guam, etc. So take a look at that. I'm sure there'll be a schedule in which all of that will be calculated, but you're going to modify the AGI and then you're going to make this deduction from that. So to be a qualified tip, it does have to be voluntary. So the customer, the payer of the tip, it can't be subject to negotiation. It does need to be paid directly to the individual through a cash payment. Again, voluntary. There cannot be any consequences for the individual who is making that payment. So it does also have to be in cash. So if someone brings a plant or they bring, some sort of gift, that's not included. You cannot include that in the deduction. So it's cash tips only, but it does include cash tips that, are left on the table or they're charged on a credit card or even under a tip sharing arrangement. So it just needs to be in that form of cash. For those employers that have mandatory service charges, those are not going to be included. So, you might recall if you're going to a restaurant and you pay an automatic 18% if you have 8 or more guests, and that goes kind of to the restaurant, those are not going to be included. So it has to be a non-mandatory service charge, so completely voluntary. Also, if the employee has not customarily and regularly received tips prior to December 31, 2024, they will not qualify. So the IRS is going to publish a list of occupations that do customarily and regularly receive tips. That's going to be published by October 2nd, 2025. It's likely going to apply to hospitality and service industry. So be on the lookout for that so you know who will actually qualify. Okay, so also, the employees are going to have to pay Social Security and Medicare on the full amount. So this is really just federal income tax that we're talking about. Businesses, you will have to, and any CPAs advising their businesses, they're going to have to report out on the Form W-2, which I'll show you a draft of the 2026 one that just recently came out. You're going to have to report the total amount of cash and non-cash tips for the employee and the employee's occupation. And then likewise on the Form 1099, designated tips to contractors and also that recipient's occupation, because it is going to be occupation driven. They do need to be in one of those qualified occupations. You can't have someone that doesn't regularly receive tips say, oh, well, let's allocate 25,000 of my dollars to tips and therefore I'll be able to deduct that. So they're really trying to curb abuse in that regard. So as I mentioned, employers will be required to track and report those tips. And for the 2025 year, since it's new, the employer will be able to rely on a reasonable method that is going to have to be approved by the Treasury Secretary. The IRS will be issuing guidance, and so keep an eye out for that. But starting in 2026, there'll need to be more exact reporting of the qualified tips. So be aware of that. Start thinking about a system that you can put in place so that you can report those cash tips appropriately and without too much hassle. But this year you are going to have to use a reasonable method. It may be a little bit difficult to do so, but start thinking about that before the end of the year, because you'll need to issue W-2s by 2020, by January 31, 2025. So the Treasury Secretary can establish other requirements as they go through their guidance to qualify for that deduction. They can also, again, as I mentioned, kind of that reclassification of the job, they're going to implement some guidance to prevent that, to prevent also abuse of that deduction. So be aware of that. Okay, so that was tips. Now we'll talk about overtime. So also overtime is going to be a below the line tax deduction. It's going to be up to $12,500. If you're a joint return, it's going to be $25,000, and it's for qualified overtime compensation. What does that mean? That means it's only the overtime pay that's required by the Federal Fair Labor and Standards Act. If you're in California, you know that you're paying overtime to your employees if they work more than 8 hours a day, and also more than 12 hours a day. And also on the 7th day of work, there's some overtime premium compensation that comes into play. So here, the only amount that's going to be qualified is the extra 0.5 of that regular rate of pay, and only for hours worked over 40 in a week, because that is what's required to be paid under the FLSA. So employers are really going to have to be aware that you're going to have to do some special math. You might want to reach out to your CPAs, and your CPAs advise your clients that they need to ensure that they properly report what the qualified overtime compensation is, because if it's pursuant to California law, that daily overtime, that weekend overtime, 7th day overtime I talked about, and also if it's pursuant to a collective bargaining agreement, it's not going to qualify. It needs to be just the overtime compensation that's eligible under FLSA. So you will need to report that on the W-2. You'll have to make sure you separate just that overtime premium. That's the 0.5 amount. And there is a process on calculating regular rate of pay. So you'll want to make sure you're calculating the regular rate of pay appropriate, and you're only identifying that 0.5 and only for hours over 40 worked in a week. And so you can use, again, a reasonable method for calculating that. So maybe you're just going to be backing out that straight regular hourly rate. Whatever that case may be, you will receive guidance from the IRS, from the Treasury Secretary. So be on the lookout for that and try to follow that reasonable method as much as possible. And then again, there's no double dipping. So the qualified tips cannot also be claimed as qualified overtime compensation. So they're looking out for that. So you might wonder, like, well, is it above the line or is it below the line? How do we know exactly how this deduction applies? Both of them, the tips and the overtime. So what it is once AGI is collected, and you can see here in the sample 1040 from the 2024 year, you have your total income, and then you have your adjusted gross income, and then below that you have the standard deduction. And look at line 13, you have qualified business income deduction. So it's going to be after that. So it's going to be after the AGI line. You don't have to itemize. So you can take your standard deduction, and then you can take the tip deduction and the overtime deduction, just like the qualified business income deduction there. So it kind of falls within that same Internal Revenue Code. And so it is a below the line deduction, but you do not have to itemize. So that is helpful. Okay, the IRS just published late this month a 2026 W-2 draft. So this will be for your next year reporting. And they might want to do a 2025 draft. But anyway, so I have the sample 2026 W-2 draft. And what has been added, so a new box 14B has been added, and that's going to be an occupation code. And so they will be releasing occupation codes. You'll be putting that in 14B. So they renumbered 14, just regular 14 to 14A to accommodate the B. And then there's new box 12 codes that have been introduced. I'm just going to talk about the two here. TP is going to be where that's the code for the tips that are subject to the deduction, and then TT is the code for the overtime pay that is subject to the deduction. Okay, so what are some implications for employers and businesses in California? Well, you want to think about your payroll and reporting systems going forward, because as I mentioned, this is going to be not only this year, but 3 more full years. and you want to consider any changes that you can do there to streamline the process, to make it easier for you so you don't have to do any hand calculations. There'll be a lot of math involved there. And so you want to ensure that you get a nice system in place that can separate the qualified tips and the qualified overtime compensation. That's really going to be your biggest challenge. And then also take a look at your exempt job classifications. You might have some employees say, I can have a deduction if I'm non-exempt and I receive overtime instead of just being exempt. Maybe I should be non-exempt, or maybe I'm not classified appropriately and I'm misclassified. So you want to ensure that your exempt job classifications are solid. And then if you have any employees raise questions about that, take a careful look at it, because if it means, additional income in their pocket, they may very well pursue that. So going back to your tipping policies and practices, again, mandatory service charges are not deductible in this deduction. So if you have clients, or if you're a business that charges service charges, you might want to rethink how you collect those funds from your customers, because if you reclassify it and it's not a mandatory service charge and instead of voluntary tip, that can be more money towards that deduction and can help the employees out on their individual taxes. So again, reinforce your tip policies with your employees. You want to stay in good practice with that as far as paying, having them report their cash tips, and the employer then reporting the cash tips so they can have a deduction in that regard. Okay, and lastly, there's going to be more regulatory guidance. This is new, as we know, and so keep an eye out for that. We're going to see new occupations. We're going to see the reasonable methods on how to calculate these things in 2025 and how to report them. And that's all for today. So please stay tuned for more episodes in this series. Thank you very much.